All right. So check it out. We've been keeping track of your progress. You just did a press release here that you're at 44 million MAUs for last quarter. So I've been tracking all of this, and
One. You got a couple of mistakes, but one mistake. The June was 52.
June was. Oh, okay, great. I'll take that. There you go. That looks much better. Okay.
The average for the quarter was 44.
Average is 44, so I'll have to adjust April and May. Let's see, by
So we released the peak. Was in June, and we released that in our deck with
oh,
the
good. I didn't see it.
presentations.
Well, that looks much better now, Chris. I was getting a little bit worried that you guys have plateaued and you're having some growing pains. I like this chart much better. Cool. All right, so let's move to our final segment here, financials. All right, let's see if we can do this quickly. This is a tough one, I think, from an investor perspective. Obviously, I think a lot of the people invested in this are in it for the sentiment reasons. You know, maybe they believe you guys will be successful long term, or they just want to support Rumble. But you've alluded to this, right, in terms of the capital required to compete with the big guys, and your task maybe even a little bit harder because you got to build everything from scratch. So I don't know, what's your approach to that long term? So I don't know how much you know about Wall Street and financing and these sharks out there, but we want to protect the little guys. I would hope you want the little guys protected, and we'd want to, if you need to raise a lot of additional capital at some point, which you probably do. Have you thought about your strategy, how to do that to protect the little guys and protect retail investors here from dilution? Like death spiral financing and that kind of stuff.
Yeah, I think a lot of people in the chat asked about like the 17 and a half and the 15. We're in a lockup period, and like so that there's that. So that obviously there's a lockup, which I think a lot of people don't realize. But two is, I don't want to run this tech company like the way Google runs theirs. I don't want to have 100,000 employees. I think that's crazy. I think Twitter having 8,000 is crazy. Look what we have accomplished. We have 15% plus of the MAUs in June of YouTube, and we have less than 200 people. Just think about that for a second. And we're not just building a YouTube competitor. We're building the whole cloud underneath it with less than 200 people. If we can do that with less than 200 people, how many more do we really need? Like,
all right. Why don't you tell me? That was that was one of my questions. How many do you need have you modeled that out? How many do you need to get to break even?
Yeah. So, and I can't get into that right now, but I can tell you what I can tell you is that I'm not going to do it the way they did it. I'm going to show the market how inefficient the market is. I think these tech companies are extremely inefficient. I think that they've lost the passion behind the staff. I think we have that, and I can't wait to show the market what we can do with what we have and the team that we have over the coming years. Remember, Rumble's first outside capital was when Peter Thiel came in. That's May of 2021. We barely had time to operate with capital. It's been like just a little over a year now. And you have your ramp up with hiring and everything. It takes like 6 months to get all these people on board that you need to have. So I think we're in a position to do really well and do it a lot differently. You hear Elon Musk talk about it all the time, like on Twitter. You don't need to have 8,000 people the first day. He's gonna cut that. Like, you don't. That's bullshit. That people that tell you need hundreds of thousands of people and multiple billions of dollars of investment. I don't look at the market like that. I think that we can accomplish significantly more on less people. And I think that the amount of the money that we're raising right now is sufficient to get us over to get where we need to go.
And what is that to get you to break even?
I am hopeful that we're doing a $300 million SPAC and a $100 million pipe, so it's roughly a $400 million raise for the dilution that we put out there. I believe that we can get that's enough capital for us to get to a place to sustain on ourselves.
I would love to see that. That's great. Best thing I heard out of all that is you have a plan to hopefully get to break even with just 400 million, and approaching a business a little bit differently, exposing the inefficiencies of big tech. From an investor point of view, I hope you succeed. That's really great stuff.